Hello and welcome to Markets View at Deven Choksey, the daily market podcast where we decode the Indian financial markets. To start with GIFT Nifty, where the GIFT Nifty this morning is trading higher, indicating a start in green for the Indian markets. The Asian markets have opened largely lower, where Nikkei has fallen more than 1%. Talking about the US futures, the US futures trade flat after cash market ended lower on Wednesday's session. The US market did slip on Wednesday, where Dow Jones and S&P 500 did fall nearly 1% each. Nasdaq falls for fourth straight session, led by Apple and Nvidia, ended over 1% lower. The technology-heavy index is showing signs of weakness since last four trading sessions. FOMC meet minutes indicate uncertainty over timeline of rate cuts in 2024. The US 10-year yield falls to 3.92% as investors bet Fed to be less aggressive with rate cuts. Talking about the energy pack, the Brent crude is above $78 per barrel. A dozen countries warn Houthi rebels on Red Sea attacks. And the gold prices are slipping as we see a lot of volatility, where dollar index edges slightly above 102 levels. So this is how the global sentiment looks like. The Asian markets and the US markets are showing signs of weakness. However, the GIFT Nifty has opened up on a higher trend this morning. And let's now take a look at the trade setup for today. With the consistent correction and the formation of lower highs and lower lows for another session, the 21,500 on the Nifty 50 may be a make or break level in the coming sessions. If the index falls decisively below the same, then 21,300 to 21,500 may be the next level to watch on the downside. Whereas on the higher side, if the index manages to hold, then it may march towards 21,600 to 21,800 levels. In the yesterday's session, the Sensex did drop around 536 points to close at 71,357, while the Nifty also declined down 150 points to close at 21,517 and formed a long bullish candlestick pattern on the daily charts, continuing a downtrend for the second straight session. On the way down, the Nifty has now reached the 38% Fibonacci retracement level, which is likely to act as a make or break level for the Nifty. Nifty is anticipated and is being witnessed to hold on to this support and prepare a base for the next leg of a move. Overall, the chances are that the fall is a retracement of the previous rise from 20,976 to 21,834 and not a trend reversal, and thus this dip should be used as a buying opportunity. The broader markets were mixed in trend and the market breadth was in favor of bulls. The Nifty mid-cap index was up around 0.3% and small-cap index was up around 0.1% and did showcase a lot of stock-specific moves, particularly for mid-cap and small-cap. So this is how the trade setup looked like yesterday. And now let's take a look at the key support and resistance levels for both Nifty and Bank Nifty for today. Nifty is likely to see immediate resistance at 21,534 followed by 21,674 and 21,732 levels. While on the lower side, it can take support at 21,457 followed by 21,456 and 21,388. Talking about Bank Nifty, well, yesterday the Bank Nifty recovered from more than 200 points from the day's low to close at 57 points loss. And we did see that it was closing at 47,705, clearly forming bearish candlestick pattern with a long lower shadow on the daily charts with above average volumes. The Bank Nifty experienced significant volatility on the day of the weekly expiry, maintaining a bearish trend as long as it stayed below the key level of 48,000. The index, however, managed to sustain above its 20-day moving average support at 47,688. It is crucial for the index to hold this level, as a decisive break below it could intensify the selling pressure in the market. Traders should closely monitor the movements around 48,000 and 47,688 for potential trend changes and trading opportunities. Particularly for Bank Nifty, it is expected to see resistance at 47,734 level, followed by 47,858 and 47,979 level, while on the lower side it may take support at 47,540, followed by 47,466 and 47,344 levels. So these are all the important support and resistance levels for both Nifty and Bank Nifty for the trading session today. And now taking a look at the stocks and news. Well, IndusInd Bank, the private sector lender, has registered a 13% year-on-year growth in deposits at 3.69 lakh crore for quarter ended December FY24, while advances grew by 4% sequentially and 20% year-on-year to 3.27 lakh crore during this said quarter. Keep an eye on Deven Small Finance Bank, as the Small Finance Bank has recorded a strong 29% year-on-year growth in total deposits at 29,869 crore for the quarter ended December FY24, while gross loan book grew by 27% on a year-on-year basis to 27,791 crore during the quarter. Adani Ports and SEZ will also be in focus, as the Adani Group company said the board members have approved the raising of funds up to 5,000 crore through non-convertible debentures in one or more tranches. Keep an eye on Mphasis, as the information technology solutions provider announced a strategic relocation of leadership responsibilities to accelerate growth across multiple sectors. Ashish Devrekar has joined the company as head of Europe with effect from 3rd of January, while Anurag Bhatia, the current head of Europe, will lead Mphasis Global Business Process Services, as we see. Keep an eye on Keep an eye on Chambal Fertilizer and Chemicals, as the fertilizers company said the board of directors will be meeting on 8th of January to consider a proposal to buy back equity shares of the company. BGR Energy is also in news, as State Bank of India has classified the credit exposure of the company with them as substandard with effect from February 2, 2023, and Central Bank of India downgraded the asset classification of the company's accounts with it to the non-performing asset on 26th of December 2023 due to divergence observed by RBI. And last but not the least, keep an eye on Vedanta, as more than 97% of bondholders of Vedanta Resources approved the restructuring of $3.2 billion worth of bonds due to mature in the next 3 years. With this, the mining conglomerate has secured the required approval from at least 2/3 of the bondholders to proceed with the restructuring plan. So these are all the important stocks in news, and let's now take a look at the FIs and DIs data. Foreign institutional investors sold shares worth Rs 666 crore, while domestic institutional investors offloaded shares worth Rs 862 crore on the 3rd of January. And with this, we come to the wrap of our podcast session for today. As we clearly see, the global markets after the new year have opened up, and there's a lot of volatility. Of course, weakness also is witnessed in the opening and the January start for both global and domestic market is worth a concern. We have a lot of economic indicative actions and triggers events both globally and domestically, which we need to watch out for. Nevertheless, irrespective of market conditions, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services, which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you are done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.